Hey, what's up, everybody? This is Market Mondays for August 8th, 2022. I'm Justin, and Fernando's here with me. What's up, Fernando? How are you?
Hey Justin, amazing as always. I'm glad to be here. Today we're going to talk a little more continuation of what we were talking about last week. We were talking about the market sentiment, the housing market, all the good stuff. And yeah, I'm pretty excited to be here and to keep talking more about these important subjects.
Yeah, man, absolutely. Got to keep on top of this stuff for sure. Cool. Well, we can start out with a little bit of a market check. Meta One's holding steady at 375.58. Been pretty stable lately, which is fantastic. And according to coinmarketcap.com, it looks like Bitcoin's up about 3% today. Ethereum's up about 4%. How you feeling? You feeling like this is still a big bear run?
I think so. To be
Yeah.
honest, there's still a lot of bad stuff going around the market.
Yeah.
Uh, like I said last week, I feel like this is a bear rally. It's like a reverse psychology play, making all the people that are investing to think that the market's gonna go up. I mean, I could be wrong. I could be wrong, but to be honest, I don't see anything positive right now to make me feel the other way around because there's a lot going on. Like we said, there's a possibility of the housing market that is crashing. We're already in a recession. Inflation is at an all-time high.
Mhm.
So I don't really see a reason why to be positive that the market's going up. Also, if we compare to all market cycles from the past, the market cycles are usually, well, they've always been 4 years, 2 years going down, 2 years going up. So
Yep.
it hasn't from all-time high. So what this means is that once you reach all-time high, there's about 20 to 24 months going down and then 20 to 24 months going up. So far from the all-time high,
Mm.
it's only been like 9 or 10 months. So if we're comparing, with previous market cycles, that they've always been at least, 3 years and a half or 4 years. I still think that there's more space to go down. I think there's still space to have a few red more days. And yeah, I mean, I guess only time will tell, but I'm not positive at this time. I don't feel positive.
Yeah, I agree. And I think what's interesting is I feel like the market is ignoring what's going on. It's kind of interesting. It's like,
Yeah,
I was thinking about after our conversation last week when we were talking about GDP numbers and how the major markets, crypto and also, stock markets, traditional markets like that, there was like the opposite effect. And I just feel like it's just so blatant that especially the traditional markets, a lot of these markets are very much rigged, because it's just so weird to see like companies, in the traditional markets, companies missing missing profit goals and things like that, and
yeah,
then the stock market like goes up the next day, and it's just like that doesn't make any sense, you know what I mean?
I agree. I mean, it's at the end of the day, there's a lot of speculation. And
Yeah.
something you just said reminded me of there's a company called Open Door in the
Mm.
US that I believe they're
Yes,
the largest
yes.
book flippers. So I was reading that this year they have so far they've lost like 60% of the value of their stock. And
67%.
yeah,
Yes.
yeah, something very high. And so far they've lost like $200 million. So the numbers are super bad. And I think last week they announced that they had a partnership with Zillow and the price went up. So people are ignoring the numbers and they're just focusing on what the media is saying, partnerships and all that. And I don't think that's sustainable. because it reminds me of the early days in crypto in 2017, where you know this guy Justin Sun, the owner of Tron, he was
Hmm.
making announcements on Twitter, and the price would go up. He was pre-announcing like on Friday I'm gonna make an announcement of something that's gonna happen, and the price went up. So there's no metrics, there's no users, there's no total value locked, there's nothing going on. The people are just buying due to what's going on social media. So I feel that like there's a lot of that happening right now. That like you were saying, people are not focusing on the numbers right now. People are not focusing on what's happening, and they're just listening to Jim Cramer on CNBC saying buy, 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 and we all know that Jim Cramer gets paid to say what he says. So he usually misguides everyone to do the opposite, and he tells you to buy, and stock goes down.
Yep.
So I don't feel confident, to be honest. I cannot tell my friends or my family to buy right now because the numbers are not adding up. I could be wrong, but I mean, I don't feel safe right now, like going to tell my mom, like, hey, buy Ethereum, buy Bitcoin. I will tell her to buy Meta One because I know Meta One is stable and it's not being affected by the bear market right now, and what's going on in the world. But I
Hmm.
wouldn't feel very comfortable on telling her to buy Bitcoin until I see that the numbers, that the actual numbers are going up. And also another metric that I've seen that doesn't make me trust the market is the price is going up, but the volume is going down.
Mm.
So that doesn't make sense. Usually, when the price of an asset starts to go up, it means that there's a lot of volume. There's a lot of people buying. You can see that,
Mhm.
I don't know, Bitcoin went from 10 billion dollars per day of volume. It goes to 50 billion. And
Mhm.
that's where you have the spikes because there's a lot of people consuming. There's a lot of people buying. But right now, the price is going up and the volume is decreasing. So that makes me think like there's some market manipulation. There's something. I mean, I don't know exactly what's going on because I'm not a whale. I'm not the owner of a major asset firm. But for me, that I'm a regular trader, that I make my profits by picking up all the pieces and trying to see when's the good time to enter the market. I am picking up all the pieces right now, and they are not inspiring me to buy.
Yeah, I mean that makes a lot of sense, and I think you're right. There's no more technical analysis traders out there much anymore. It's all this kind of hype kind of stuff like you were talking about, or listening to other people, which is really dangerous because
Yeah,
the thing is that we know psychological propaganda happens all the time in media, and it's really easy for someone to maliciously tell you something the opposite, like you're talking about Jim Cramer and other
yeah,
major people out there who a lot of people listen to, instead of looking at the actual numbers and doing technical analysis, which is a way more fundamentally, and that's what's happened in the stock market. I mean, that's why I got a stock market a long time ago, was because
yeah,
I just saw that there are so many people who are, like Robin Hood freaks, right? Who are
yeah.
just,
Moon boys. They call them moon boys.
yeah, man. They just, all they do is they're just all about speculation. Oh, somebody did something. Well, that must mean that, we got to
Yeah,
buy this stock really quick because everyone wants to make a quick buck, and nobody's interested in the long-term game anymore. And yeah, so it's crazy. And I don't know where it's going to go, but I definitely agree with you. I would be cautious getting into markets right now too. So I know you had a couple of interesting stories you wanted to talk about. You want to dive into those?
yeah, absolutely. So I wanted to talk a little bit of what's happening this week that can affect the market a little bit. One of the things going on, actually, this Wednesday, we have the consumer price index reports. These are released monthly. For those of you who do not know what this is, These mark a change in the price of goods and services purchased by consumers. Last month, it was 0.7%. The forecast for this month is 0.5%. It is always better that the percentage goes down. So this is important to traders because rising prices lead the central bank to raise interest rates. So in general, raising interest rates hurt the performance of stocks. So yes, it is better when the percentage goes down, because if the percentage goes up, it is very likely that the performance of the stocks will go down. And on Thursday, we have the unemployment claims. The unemployment claims usually come out every week. And last week, we had a number of 60,000 unemployment claims. And for this week, we're expecting that we're going to have 62,000 unemployment claims. And
262,000.
Yeah, so it's a 2,000 increase on the previous week, which is not a lot. I mean, it's to be honest, it's not a major increase on the previous week. And this is important because unemployed people tend to spend less. So a higher number of unemployment means less volume on the stock market, on the crypto market, or anywhere where you can invest.
Consumer goods, anything, yeah.
Yeah, I also wanted to talk about today about the importance of private keys within the centralized exchanges, because recently we had several cases where we had the exchange. I'm sure a lot of people know about Celsius and Voyager as well. So these exchanges were trading people's funds. They were leveraging people's funds, and they were trying to make money with the customer funds and give them, an annual interest on whatever they had on the exchange. So if you had Bitcoin on the exchange, you were receiving like 8% or 10% a year. And the same with Voyager. So if you had Bitcoin, Ethereum, USDT, or whatever, you were receiving an interest. And the way that you were receiving the interest was, they were leveraging your funds. You had your funds on the exchange, and they were using that to short the market, to long the market. And eventually they made a couple bad calls. I think Celsius was involved in the Terra Luna fiasco. I think they also had some UST, and they lost a lot of money. So what happened is that if you had funds on the Celsius exchange or in Voyager, you were not able to pull out your funds anymore. A lot of people, I'm not sure if the SEC is going to do something about it. I'm not sure if something's going to happen eventually where you're going to be able to get your funds back, and it's not going to be a loss because you're going to get your funds back. But at this time, if you have funds on Celsius or in Voyager, you cannot withdraw your funds. And the reason why this is because if you don't own your private keys, you don't really are in control of your assets.
Yeah.
So Celsius or Voyager or whomever, they can just log into your account, freeze your funds, and now you're not available to withdraw your coins. I mean, you don't even know if they're in the exchange because they're leveraging your funds against other markets, and they're shorting and they're longing, and you don't even really know what's going on. So this week we had another case where we have a company called HODLNOT, which is a lending company, which was doing pretty much the same as Celsius. And I don't know exactly what happened, but they lost the funds of a lot of customers. And now, they came out with a message on Twitter and on their website saying that For the time being, customers were not going to be able to withdraw their funds. That something was happening. They don't really explain what was going on, but yeah, so users are not able to withdraw their funds. And I wanted to talk about the importance of having your private keys, because if you have your private keys, you're always in control of your funds. So yeah, I mean, if you have all your coins in a hardware wallet, or if you have it on your paper wallet with the Meta One exchange, you're always in control, and no one can take away these funds from you. So it is very important, because there's a lot of people that they just started investing in cryptocurrencies and they don't really know what a private key is. And for those who do not know what a private key is, it's a security code that's displayed as a combination of letters and numbers, usually 52 characters. And this is what you use to access your wallet. So if you don't have this private key to access your funds, it is very likely that, well, it's not very likely, but it is possible that if something goes wrong, like what happened with Celsius, that at one point you're not going to be able to withdraw your funds. So I always tell everyone I know to keep your coins off the exchange. And if you already have more than $1,000 worth of cryptocurrencies, it is important to note that you should get a hardware wallet. And if you have a hardware wallet, your funds are safe there, because when you're using a hardware wallet, you're in control of your private keys, and no one, no exchange, no hacker, anyone can access your hardware wallet, because only you have your private keys. I don't know if you want
For
to add
sure.
something to that.
Yeah, no, that's really important for sure. I love hardware wallets, and we're going to have functionality to connect hardware wallets to the Meta blockchain and Meta exchange down the road here. But yeah, I mean, that's really important, the difference, and understanding the difference between a hot wallet and a cold wallet. Hot wallet is basically a wallet that's connected to the internet at all times. Typically, it's on the internet, and then a cold wallet is a wallet that is disconnected from the internet. So that's like a hard wallet, where unless you are making a trade or you're sending or receiving funds, that wallet is typically disconnected, and it's air gap, right? So it can't be accessed in any way, shape, or form. So they're definitely really, really good to have. And yeah, I agree with everything that you said. And that's really something important to look out for. And also do your research about the platforms that you're getting involved in. Think you and I are big fans of dexes, decentralized exchanges, versus
Definitely.
any kind of centralized exchange. I don't even use centralized exchanges anymore, because I just don't like them. I mean, and if you look at the big players in the space out there, they're not great at all. So yeah, for sure, I think great tips, absolutely.
And I agree with you. The only centralized exchange I really use is Binance, because they
Yep.
have a vast amount of cryptocurrencies that you can buy or sell. And a lot of times, some of the cryptocurrencies you want to buy, they're not on, let's say, for example, Uniswap or PancakeSwap. Sometimes you're not going to find those cryptocurrencies there, or there might not be a lot of volume. Let's say you have I don't know, $1 million worth of a coin, and there's not a lot of volume on a decentralized exchange. So that's why you might want to use Binance. And yeah, I mean, like you were saying, I don't really use centralized exchanges a lot, but sometimes I do use them because of liquidity issues, or because there might not be a coin that I'm looking for in a certain decentralized exchange.
Yeah, absolutely. And Binance is a good choice. I mean, they're the biggest exchange in the world, and they have no problem with liquidity. So yeah, I mean, if I had to choose, I'd probably use Binance as well. So that's a good pick. Just personal. We didn't get paid to say that, but it's definitely a good pick for sure. Well, cool. Yeah, well, I kind of wanted to talk a little bit about the housing market and also about what you were talking about unemployment, because I think that those numbers are going to start to change with the unemployment claims. I don't think it's going to happen now because unemployment numbers are always lagging what's actually happening in real time. But I wouldn't be surprised if we start to go into the fall, into September, we start to see in October, we just start to see those layoff numbers kind of going up. And the reason why I am feeling that way is because we have some interesting things happening right now when it comes to um, uh, jobs and layoffs. So actually, you told me about this, but last month, Amazon sheds 99,000 jobs. That's a
Yeah.
lot of people. Um, and basically, what they're saying is that they overhired during the pandemic when everybody was home and Amazon was probably the most, raking in the most dough out of any company in the world. And now they basically decided that they don't need 99,000 of those people, and they're letting them go. And I don't know about you, but I definitely think that this is going to have an impact on the economy.
Yeah, absolutely. And it's not just Amazon. I mean, a lot of other tech companies and in different areas of the market, they're all firing people. I also saw that Coinbase was firing a lot of their employees, and I've seen a lot of companies right now that they're just cutting a large amount of employees. And yeah, I mean, definitely the reason why they are firing people is because, I mean, we already saw the numbers. We're in a recession, so I think that we're going to continue to see an increased number on the layoffs. And like I said, not just on Amazon, we're going to see it in other companies, maybe like in Apple, maybe Microsoft. I don't really know which companies are next, but definitely I think that we're gonna see more people being laid off. And yeah, I mean, we're already in a recession, so I guess
Yeah,
the next months we're gonna see how it plays out, and hopefully it's not as bad as a lot of people are expecting it to be.
yeah, yeah. We're definitely in a recession, regardless of what that dude in the White House who's hiding in his COVID isolation says.
Yeah,
Anyways, and so I found this really cool site. It's called layofftracker.com. If anybody's interested in watching this, because I think this is a really, really, really important part of what's happening in the economy. So this is really interesting. So if we look at this graph, so this is tech companies only, and this is exactly what you were just talking about. And
yeah,
we kind of look at, and this is a month over month comparison. This is from January 2021 until basically now in August. You can see that in July and August, it was the highest amount of layoffs that we've seen. If you look at that compared to last year, it's a massive, massive increase. I mean, in July of 21, I mean, I can barely even look at this because there's so little
yeah.
reported. Let's try June. June, we had 2,034 layoffs in June of last year. And in June of this year, we had 28,000 layoffs. So that's a really big difference.
Yeah.
Um, and it doesn't look like it's getting any better. July was a little bit better, but I would not be surprised if August is either is the tie with July and June, or it's higher. um, and it's kind of crazy to see. And what's even crazier is when we look at this versus we can go into non-tech companies, and we can see that non-tech companies, that's not as is not as much. It's only 30 companies, I think, with the tech aspect here, we're at 179 companies just in the month of July. And also, if we look at layoffs, we're only at 18,649. So there's a really big difference, but we got some big names on here for the non-tech: UBS, plus 7-Eleven, Loan Depot. Now, talking about the housing market, we'll talk a little bit about Loan Depot later, but their situation is really concerning. And they are the largest mortgage broker in the United States, and they're not doing very well, and they're laying people off, and they lost $200 million last quarter. And it's really not good. But it's kind of crazy to look at these numbers because it makes it a lot more dire than you thought it was, right?
Real. Yeah. Oh, yeah. And then you can see there in the chart that you're displaying. I mean, the numbers are going up by a lot. And well, in August, we can see that they went down a little bit. I hope that's a relief sign that things are getting better. But we can definitely see that from previous years. Well, from the previous year to right now, there's a major increase on the numbers. And like I was telling you earlier, the numbers do not add up right now for the market to keep going up. So
I know.
maybe, yeah, so it might be like an inverse psychology play right now, where hedge funds and whales are buying stocks and cryptocurrencies to make to make an illusion of the market being healthy, and that it's going on the right direction. And eventually, once people get comfortable and start buying, they'll start dumping. And I mean, to be honest, I feel like it's going to be that way, because like we're seeing right now, the numbers don't add up. But only in time we'll see what's really going on, and we'll see which direction the market is going to.
Yeah, absolutely. I totally agree with you 100% on both those points. So housing market. I'm interested to hear from you a little bit, Fernando, about what's happening in your neck of the woods, and then I'll kind of talk a little bit about the US. But what's happening down there with the housing market right now?
To be honest, here in Mexico, I don't feel like the market's going to crash
Okay.
anytime right now. The reason why is because inflation is very high all over the planet. And something that we're seeing right now in countries like Mexico is that a lot of people from the States and Canada and Europe and a lot of places, they're moving over here because it is no longer affordable to live, for example, in the States with the salaries we have right now. And the price of the houses went up really high, and not a lot of people are buying. However, like, I know you feel like the market's going to crash, and I know that there's a lot of people saying that we're in a bubble and the market's going to crash. But until it doesn't crash, a lot of people are moving to Mexico. So that's generating a lot of demand. And especially where I live, I live here in the Riviera, where Cancun and Tulum, all those places are. A lot of people from California, from Texas, from Vancouver, from all over the world, they're moving over here because it's cheaper. It's cheaper to buy a house. It's cheaper to pay for groceries. It's cheaper to pay for services. So the price isn't really moving down right now over here. However, I feel like if the market does crash in the States and Canada and other places, I feel like people are gonna start buying properties again over there, and it might push the market here in Mexico and other places down, because people are no longer wanna move outside because they can afford the houses and whatever again. However, I'm not sure if that's going to happen, because even if the price of houses goes down, inflation is still super high. So buying milk is still high, buying, paying for energy is still high, buying for your daily, the daily things that you consume, the food or whatever is still high. So even if the market of the houses go down, I still feel like a lot of people are moving to places like Mexico. And yeah, I mean, I guess only with time we'll see what's going to happen.
Yeah, I totally agree with you, and I think you bring up a good point with the cost of living, and especially specifically energy. That's one of the things that I think a lot of people are not paying attention to right now. Is there's a big energy crisis happening in the world, specifically because of what's happening with Russia and Ukraine.
Yeah,
I have a lot of family in Europe and friends, and there is a lot of crazy things going on with that because of the amount of gas that Russia produces, etc., that's no longer flowing to a lot of these countries. It's also affecting gas prices in North America, not only for fuel for gasoline for cars, but also fuel for electricity. And it's an interesting thing because I'm seeing more and more countries. The EU yesterday just passed a gas reduction bill where all of the countries in the EU agreed to reduce their gas consumption by 15% this winter, which means that they have to basically make their citizens use 15% less gas. And also that in a lot of countries like Germany and other places where that even those places are kind of coveted as places where people make more money than a lot of other countries in the world in terms of averages. They're seeing that there are more and more people who can't pay their electric bills or their gas bills because they're getting so high. So I think that also is kind of coming into this perfect storm of economic downturn. But I think that places like Mexico are actually going to benefit from these things, like you
yeah,
said, because people are going to move there. Because regardless of what the issues are going on in the world economically wise, things are always going to be less expensive in places like Mexico, or places that are the islands, things like that, where it's tropical, it's great to be there, and you can get stuff for sometimes half the price of what you can get here. So
yeah, absolutely. Especially since nowadays you can work from home, so
mm-hmm.
it makes more sense to move to a place where the cost of goods is cheaper and you're still making the big bucks. So I agree with you that I feel like Mexico is going to benefit a lot from what's going on right now, and not just Mexico. Other countries like El Salvador and
Yep.
Colombia, and yeah, other places where the economy is healthy right now. Maybe not Argentina because the economy is not healthy, and the currency over there is depreciating super fast.
Yeah.
But other places where things are stable and the market's booming and everything's cheap, like Mexico, I feel like those countries are gonna benefit a lot from the situation that we're living right now all over the planet.
Yeah, I agree. Absolutely. Well, that's good. I mean, that's good to hear that there's still a lot of demand in the United States, in Mexico. That's kind of the opposite of what's happening in the United States. So this is my favorite YouTube channel for Housing Again, Reventure Consulting, and he's talking a little bit here about existing home sales and how they're collapsing. So this is basically a chart of existing home sales. You can see that back in 2000 and end of 2001, middle of 2002, which was the pandemic height, we had really high numbers, 6.73 million homes sold around that time. And now we've really plummeted from kind of the highs at the beginning of 2002. 2022, we're down below the average, so we're just about 5.2 million. And the crazy thing that's happening is what's happening with the amount of mortgage applications, the amount of mortgage applications are going down as well, which means that there are
Yeah.
less buyers in the market who are interested in buying homes. So we have this issue where, let me see if I can find the chart that he shows. Here it is.
Sure.
Oh,
I
sorry.
read somewhere that right now the mortgage applications it's on the lowest in like 7 years. So it's
Yeah, it's really low. It's like close to September 2011 low,
yeah.
or sorry, 2001, September 2001 low, which is really low. Um, let's see. So this is not what I'm looking for. Hold on. I promise it's coming. He talks about it. Maybe I missed it. I don't know. Anyway, but he talks a little bit about how the number of mortgage applications have gone down significantly. And so this is a really concerning information, because of the fact that we have a really, really, really exploding inventories all over the United States, where a lot of houses are coming on the market. Because what's happening is a lot of people, like friends of mine that I even know now, are just learning that, oh, the market's been really good, so maybe now it's the time to sell my house and go somewhere else, or take the profits and do something else with that, or whatever. And so what's happening is they're putting their houses on the market all over the place. And actually what the data is showing is that these places that have the biggest amount of inventory and the least amount of buyers are pandemic cities, or areas. So these were areas like Texas, Florida, Arizona, where all of these people migrated to during the pandemic from the big cities like New York, Chicago, big cities in California, etc., because they were trying to get away from the repressive restrictions. They were trying to get away from this stuff and get to other areas. And like you were talking about, this has also been spurred upon by the whole work from home movement, where now there's so many companies that have realized, holy crap, like, and Apple announced that half their employees aren't going to go back to their offices because it's cheaper for them to not rent the office space and have their employees do the same job that they've been doing at the office at home. So that created those major migrations that we saw. And so this is also creating these major swings in the market, where we have a dangerous combination of massive amounts of inventory going up, buyer pool going severely down, and then also sellers just basically having to price cut to even sell their property. And what's insane is, in June, this is the first time this has ever happened in history. Basically, you know what mortgage-backed securities are?
Mortgage-backed securities.
So what
Sure.
mortgage-backed securities basically are is it's a whole Ponzi scheme, but it's basically a bunch of mortgages bundled into a security. And then the banks that own those mortgages will bundle them into mortgage-backed securities. And then they basically put them out on a marketplace. And these mortgage-backed securities are purchased by other asset companies, et cetera, and they're traded back and forth. And
It kind
so
of sounds like you're using one credit card to pay for the other one, and then you're selling that debt to someone else, right?
that's pretty much how it is, man. It's crazy. And it's actually, and these banks and these big asset firms, they put these mortgage-backed securities on their books as assets, which
Yeah.
is even more insane, because they're just basically buying other people's debt. And so basically, how it works, how they sell them, is they sell them in a marketplace, and there's a certain price that the bid is set at, and then buyers make offers to basically come to a point where they agree on a specific price, and then they'll sell the mortgage-backed securities. So mortgage-backed securities in the month of June went no bid. What does that mean? That basically means that there was not a price that a buyer would pay for a mortgage-backed security in the month of June. There wasn't a price. There wasn't a price they would agree to. So that's really crazy because mortgage-backed securities are one of the biggest, the largest traded securities in the United States. So that tells you something. And this is combined, though, with very interesting other kind of housing migration that's happening that we haven't seen in a long time, which is a generational housing kind of transfer in that's happening in America. So we've now gotten to this place where a lot of baby boomers, this is happening in Canada too, and I wouldn't be surprised if it's happening in Europe as well, where we have this massive group of people that are baby boomers, we call them, which are these folks that are 65 and older, seniors, and they own the most houses in the United States, 3 times more than folks under the age of 65. So they own 28.37 million houses in the United States. And what's happening is a lot of these people are passing away. They are moving out of their homes and into nursing homes, and they're putting their houses on the market. So again, we're adding to this massive increase in inventory with not a lot of buyers because the mortgage rates keep on going up. And it's a really crazy combination that we haven't seen before because we're having this recession, this generational housing transfer, and mortgage rates going up all at the same time. So it's pretty crazy. And really, if you look at this chart, I mean, we look back from 1980 until 2002. This number has never been so high. And so there's a huge gap between this, and it's just going to keep on sort of snowballing as more and more of these people just have to pass on houses for reasons for a lot of different reasons with their age. So and a lot of what happens in those situations is when homes are being left to children, etc. A lot of the times those homes are just liquidated, and so they go on the market, and what that creates is it creates more issues with the value of homes, because that's what ends up happening is sellers have to start cutting prices, and it's really good for people who want to buy a house. I still wouldn't say buy a house now, but maybe in like 6 to 12 months you're really going to be able to find a lot of great deals.
Yeah, absolutely.
But pretty crazy. And I think what we talked about on the last call, 2007 was really more of a US focused recession, and I really am just of the opinion that this is bigger this time.
Really global. Absolutely. Because the recession in 2007 was not caused by printing a lot of money. It was due to other factors. And since all the currencies on the planet are pegged to the US dollar, since the US started printing a lot of money, it affected everyone all over the planet. So yeah, definitely the problem we have at hand right now is way bigger than what happened in 2007, in my opinion.
Yeah, and that's the thing is I don't think we had so many different factors going on at the same time. I mean, if you look around the world, there is not a point of economic growth happening. You've got Europe in the middle of a war, a really shrinking economy in the United States. You have this crazy more property crisis happening in China, and there's really not too much of any kind of positive economic growth happening. And have you heard anything or read anything about this crazy China property thing going on?
I think I have. It's regarding a company called Evergreen or Everest, something like that. No,
That's
Ever.
one of them, yes, but it's a more systemic issue, and it's crazy what's going on. So in China, in the last 20 years, there's been a boom of basically there's been a boom basically the middle class. There's been a creation of the middle class, and wealth has come up more. There's been more families over the last 20 years that have come into the middle class and have been able to purchase houses, et cetera, et cetera. So what's happened is basically the China's GDP, a lot of it is focused on um, basically property and ownership. 90% of urban residents own property, and 70% of household wealth is tied up into property. So those are really big numbers. And basically, the average house price, if you look at this chart between 2010 and 2020, has just gone through the roof, just like everywhere else around the world. And there's been building and building and building and building happening because of this massive demand. And so
Yeah,
what's happened is there's been this model that they've been using where basically these new homes are being built. The way that they finance them is the buyer puts down a certain amount of money, they get a loan, the developer gets part of that loan, and they're able to build the home. And so what's happened is the pandemic has really slowed the economy down, first of all. And second of all, what's also happened is these developers have started to be able to fail and meet the dates that they were supposed to deliver these houses. There are two different reasons why this is happening. First of all, it's happening because of the slowdown in the economy. There's a lot of other things going on in China with the economy that's crazy. And a lot of it doesn't get talked about because the Chinese government censors so much. And second of all, because basically the People's Bank of China put out this three red lines policy, which basically is a policy that prevents developers in the industry from borrowing more money or borrowing money to service the debt they already have
yeah,
if they don't meet these three criteria. And the three criteria are: asset liability ratio is no more than 70%, a net debt ratio is no more than 100%, and a cash to short-term debt ratio is 1 or below. So there are only a handful of developers in China that actually can uh, um, meet these demands, and the rest of these developers are basically with just basically can't lend anymore, can't borrow any more money. That means they can't pay their employees, they can't pay for building materials, and they also can't service their debt. So what's happening is that they're not able to deliver these houses, and now people in China have decided that they are not going to pay their mortgages because they're not getting their house.
yeah,
So we're starting to see massive amounts of defaults happen. We're starting to see companies like Evergreen, I think was the name of that company, that went bankrupt. And they were one of the biggest developers in China. And so this is
yeah.
going to have a huge ripple effect because the Chinese economy is massive. And this is happening all over China.
Yeah, absolutely. I agree that something's happening right now. And I think that Evergreen was the biggest real estate company in China. And I do think it went bankrupt. So yeah, I
Yeah.
mean, it's crazy what's happening right now. And I guess only time will tell where the which direction the market is going.
Yeah, absolutely, man. Absolutely. There's a lot happening and a lot going on in the world. And, but, I think the important part is, this is all information that we provide so y'all can be prepared and you can be educated about what's happening. We don't have a magic ball. We don't know exactly what's going to happen in the market. It's, macroeconomics is a really tough thing, and even the brilliant people on the planet, they're just making guesses, and sometimes they're right and sometimes they're wrong. And but all we can do is continue to prepare ourselves and continue to make smart choices, get into things that are not affected by these things, that are stable, that are going to be a safe haven for us to be able to ride this stuff out until the wave moves on and things are looking brighter. So
Yeah, absolutely.
yeah. Cool, man. Well, I think that we covered a lot of things today, and we'll look at those unemployment numbers later this week and discuss that next week. And yeah, do you have any final words?
No, not at this time. Just that I think it's very exciting to see what's going to happen in the next months. I hope that it's not too bad. And yeah, just to thank everyone for listening to this podcast, and we'll see you next week.
Yeah, thanks everybody. Take care. Have a good one.